All right, good evening, guys. Kata Tortoise Capital. This is Foundation's Q&A for May 25th, 2023. So we had just a couple questions from Hamad this week, so we'll plow right into that one. He had some residual questions left over. One of them was on the Kata challenge, and he notes that he's got 190 trades and 3 symbols. And he also noted that on 19 May I'd asked him to start concentrating on finding the movers. So he's wondering if it was time to move on from the Kata challenge. In addition, he had some other questions which I think we addressed, but I wanted to just get them all just in case. So the OR3 concept. Sometimes we get Kata 2s and collapsing dragons and EDs in the river. Do we take them? Is there a way of knowing ahead of time what kind of a day it will be? I think I answered that one. And is it time to... Yeah, that was the residual. Is it time to move on to other symbols? So the first thing I want to say about the Kata 2 is that, the key word is Kata. And, that means a form or standard work. And one of the things that you get in the martial arts when you do a kata is, let's say you're learning the first form as a yellow belt or something, and in that form we're concerned about defense, and so you end up going through a set of motions, and then you do a front block, in which case your arm comes across your body from horizontal to vertical, and it sweeps across the front of your body, and the intention is that any punch that's coming straight at you, you just deflect it. And then we drill that until it's perfect muscle memory every time. Well, later in your career, as a black belt or whatever, at some point you learn the technique for a back fist strike or a hammer fist, in which case what you're doing is you're making a fist with your hand and you're making a strike across your body like that. And you realize that, that's the same motion as the front block. Only with a deeper understanding, having perfected the move, you now realize that thing actually can accomplish other things as well. So one of the things that we get out of doing the standard forms in a standard way is that we build proficiency on certain patterns that are going to be wildly or widely useful. So that's why the name Kata came about. The idea is that if you study the forms and get proficient, you then have a solid base of battle drill to work on. And Kata, the 2 simply meant that it was the Kata 2 was our second favorite pattern. The first one being the collapsing dragon, and then we really liked Kata 2 because when a collapsing dragon works, when you had a harsh sell-off and then it rebounds, then when that thing fails, it's not unusual to see that the size of leg 1 is also the size of leg 2, and the collapsing portion of it means that the move happens large and fast, which is what we want. It reduces uncertainty. But what we liked about Kata 2 was the idea of this buy on dips, that if it doesn't fail, but holds support at a higher level, excuse me, but instead of failing, it holds at a higher level, and we can say, yeah, we had a successful SSC, and then it hit some level, sold off a little bit, but then resumed. And we said if it breaks higher than the previous maximum excursion of the RL10, which is here, then that first move past that gives us new information that there's new buyers coming in. At this point, the buyers are coming in and hitting that with money, Whereas over here, they didn't show up, and so that caused the price to roll over, and it let the downward pressure from the harsh winter take over, and so you got some kind of retracement. But so the idea behind an emerging dragon, which we like, is that you have absolutely clear evidence that new money has come in and that it is stronger than the old sellers. And so they win in the tug of war, and that thing goes up to new levels. You have broken through the resistance of the emerging dragon. Well, if we've already got a winning leg in on the SSC, so if the SSC actually gave us the opportunity for a winning trade, it has already started to overcome the selling pressure that caused the harsh winter and potential this SSC right here. The fact that we were able to buy that and it turned in a winning trade says that we have already started to negate the power of this downward move, and that maybe it's going to go up. So to review, the reason we like the collapsing dragon is that when it fails, the fear that drives and the fact that we've already seen a harsh winter suggests that that move is going to be large and fast, which is our preferred one. But if it doesn't fail, if instead it holds, our second favorite pattern is the Kata 2, the second favorite pattern, in which we can start buying it inside here in the pocket with the reasonable position that if it breaks above the previous RL10 peak and we've got an emerging dragon, that there will be no doubt that this thing is heading north, that is really a strong signal, and that could be an accelerating move. So what we're doing when we take the Kata 2 by buying it in here in this little pocket is that we are early in the recovery from the harsh winter. We've got one piece of evidence that the SSC was successful, and now we're betting right on the edge of the second leg starting. We're trying to get it during the quiet period before the upside move is confirmed with the emerging dragon, and that gives us better fills because we're not chasing an explosive move. And it's often the case that this breakout from resistance is an explosive move because of that new money coming in, and then you get a break of resistance, and then everybody who was trying to short this bounce puts their stops in here, and when those hit, that's why the upward move, when it works, can be really fast. So the argument is, let's just go ahead and venture in the pocket, and then if the pocket fails, we're very close to the collapsing dragon anyway. So we're taking the smallest possible risk inside here in the pocket. And then we're betting that if that works, now because I have the position on, the energy of the emerging dragon is going to move that up. And then instead of chasing that and wondering where I'm going to get a fill, I can actually be taking my stop and moving it above my entry to get to no lose plus dinner for 2, and then I'm good. So the idea of Kata is that this is a standard play that's part of a series of standard plays where we have the harsh winter that gives us the SSC, and then Kata 2, and then if the SSC fails, it takes us to the collapsing dragon. And oh, by the way, if this thing bottomed out, but it never even got to the PSAR flip, because remember that the PSAR flip is sort of the official entry of that thing. If this thing's coming down and the price sells off and it looks like it's starting to be an SSC, and we know that the bottom of the box is going to be here, but it fails before it even gets to the PSAR, well, then the CD is even better because there were so few buyers that the thing just paused and then collapsed. And so we love that one. The sooner this thing fails, the better. So even if we get the SSC entry and then it starts failing, we love taking the collapsing dragon because that's going to be a large move like leg one, and that's going to pay for all this incremental losses in here. But if it works and we get a Kata 2, we don't mind entering in here in the pocket before the RL10 takes off, because we know if this does fail, we're going to be into a collapsing dragon pretty soon. We would rather that it fail sooner rather than later. But when it does work, we're already into the position, and then the explosive move happens, and then we should be able to be managing our exit instead of chasing an entry. So that's where the phrase and the name Kata 2 comes from, and how it fits inside a series of trades in a standard play. More on that in a minute. So far, so good. Just kind of give me a thumbs up if we're all right. Okay. All right. So the next one was to explain the OR3. So I really want to put that as the timing inside like the first hour. Hour one, which is right here at 60 minutes. One of the things that we know from a lot of back testing is that in the first hour, we got like, 6.5 hours? 2, 3, 4, 5, 6.5. So we have 6.5 hours while the market is open. And one of the things that we know is that that first 60 minutes we know that in that first hour, 90% of the time, the high of the day or the low of the day is going to occur inside the first hour. That's phenomenal. So if I've got if I've got some kind of opening here, the market closed here, and then there's time passes, and then it's going to open here. So we're stalking a new day right here. So here's the new open. As soon as that opens, I know that I can get the reasonable move, maximum reasonable move, is a range stat in either direction. So a plus range stat and a minus range stat. So, and I know that because the opening price is simultaneously the high and the low. So one of the things that we might do is, we know what the R stat is, and we can take 1/10 of that, and that becomes our R10 minimum manageable risk box. It's not crazy to put an R10 risk box right around that opening, with the idea being that, look, I know that in the first hour, I'm most of the time going to be seeing the extreme move. I just don't know when in that hour that's going to happen. But if I bracket this and I don't have a directional bias and I just follow it out of the box, whichever way that goes, and then I'll take the opening as the stop. I've got 1 unit of risk in either direction, and this thing goes this way. And if it just moves 1 box in my favor, I've still got 8 more potentially that it could go to. But by that time, I should be able to have gotten my stop out of that just enough that I can turn that into a no-lose plus dinner for 2, and then I can just manage the stop from there on. And the same thing to the upside. So this is a way to treat the opening as a critical state, because from the moment of the opening, you actually have the maximum width of the move in both directions. Once this thing starts moving and it does something like this, well, this is now the low of the day. Now my range stat is only going to be from there to here, whatever distance down that failed. Here's my range stat. So the from the opening moment, once this price starts moving, this maximum reasonable move from the current high and low of the day starts to converge until it ends up being, I get some exit at some point, and then that becomes the actual day. So these other ones are all just potential days. But from the opening, I actually have the maximum reasonable move in both directions, which is the widest range of possibles for the day. Then it becomes more and more the day that it is, and less just a theoretical day. So the idea behind the paying attention to the first hour is that is 90% of the time the high of the day or the low of the day is made in there. We just don't know what that is in the moment. So if it opens here, and then sells off and starts going that way, we always know what the low of the day so far is. And so I can just tentatively say, well, that's the low of the day, and it can still move a range stat off the top. And as long as, if this happens in the first 60 minutes, then I can say, well, until proven otherwise, that is the low of the day. And if I see a pattern after the low of the day that I recognize that I can put an MMRB on, well, then maybe I can just use visual box trading and get my entry in, and then as soon as I can move my stop to no lose plus dinner for two, then it's just managing the trade, and I've gotten into that thing in the easiest possible way. Well, there's another piece of information that's useful, and that is that even we know that the high or low of the day happens in the first hour 90% of the time. We also know that 40% of the time, the opening itself is within 10% of what will turn out to be the high and the low of the day. Once again, we don't know which one that's going to be, but that means 2 times out of 5, 2 days a week, if you put this little bracket around the open and just follow the price, you got a really good chance twice a week of catching that big old move to the high of the day. Now, it may not be a range stat day. In fact, only 1 time out of 6 should it be a range stat day, unless you are choosing this technique on a day where you already know there's going to be a big gap, because we know that the size of the gap predicts the size of the follow-through. So if you have a big gap day, it doesn't matter which direction, but if you have a big gap day, you have an improved chance of seeing a range stat kind of day. So anytime you hear, hey, the futures are really up big or down big or whatever, or you're looking at some pricing data of the the 2 hours before the market or whatever, you can sort of already tell it's going to be a big gap day or not, and then that's the day you want to sharpen your knife, and that's probably when you want to start the idea of bracketing the opening. Why do those big gap days lead to big moves? Because there was a lot of news. There was a lot of news in the pre-market, and there's a bunch of people that aren't trading that, and they're just waiting for the opening to start processing the new position that they want to have as they try to interpret what the news is going to be. So they are motivated buyers and sellers. And then other people that are short-term traders, knowing that, are going to be motivated intraday traders. So the bigger the gap, you get panic and exploitation reaction from the longer-term traders who are adjusting their position, plus the very noise of the gap is going to start bringing the short-term traders in like sharks who smell blood in the water. So there is a self-fulfilling prophecy that big gaps lead to big moves. Well, the bigger the gap, if that thing starts failing, then we can already see where was yesterday's close, and we can start framing the gap as the opportunity. And if we have a MMRB up in here, we might even be able to get a 2-to-1 just on a closure of the gap. But if this thing doesn't fail, if it gaps up here, doesn't close the gap, and then starts to resume, guess what that looks like? It looks like a Kata 2. When if this was yesterday's close and here was the gap, you just fill that in and said, oh, that now looks like a Kata 2, and that was like an emerging dragon entry. So all we do with the gaps is just fill in the move and makes it part of that first big red or green candle that gets our attention. And so the problem of what to do with the gap is solved. And then your ability to use these visual boxes of the range stat and the R10, and 3 of those R10s turns out usually to be a frog box. And if you have room inside your range stat for 3 of those frog boxes, you're going to have a FQN of 3. And then you can see that on the daily report to see which ones really support the idea of using R10s and frog boxes as a way to frame routine trades. Now, I say all that simply to say so that at the 3-minute mark from the opening, we are already in a position to start using the OR3 as a way to mark off the difference between the noise of the overnight move that's getting resolved, and then by 3 minutes, maybe the easy orders have been filled already and executed automatically, and now it comes out of that noise and then starts making that move. And I like to take those trades when I notice that the OR3 box is already bigger than my standard MMRB, the R10. Because I know that OR3 was relatively noisy. The amount of volatility in that very first 3 minutes was enough. Well, the OR3 then gives us this idea that you wait 3 minutes, you find the high or the low, and then you take it in that direction. That's not dissimilar from the idea of from the open, you just put an MMRB around the open and you take it in either way, and then you use the opening as the 1R execution stop, and then just position that so that turns out to be a 0.2 loss. Position size so that if you took the full 1R execution risk, you're just taking a 0.2 loss. So this is what we now call hybrid frog. And it's a frog box. It's a style of trading because back in the old days, when we knew that the first 60 minutes we were going to see the high or the low of the day, but we just didn't know. We set up the slow frog so that we just waited from the open a total of 60 minutes, and then whatever path that thing took in the first 60 minutes, and there we are, we can say, oh, well, this is now the high of the day, and this is the low of the day, and if that's more than a frog box, then we can just take the next breakout to the upside and then use a frog box as our 1R. This was fine on those 3 days out of 5 when the opening was there and it just didn't immediately go, when it wasn't part of the bottom 10% of the day. You could afford to wait 60 minutes, but it turned out that 2 times out of 5, what you had, especially after a big gap day, is you had the gap opening, and then that thing just went. And then in the first 60 minutes, you watched that thing go up 1, 2, 3 frog boxes in a row, and you couldn't do anything because you were waiting for the 60-minute, and then the move of the day was done. And you will remember the 2 days out of 5 when that happened and you didn't get the trade. So we said, well, if 90% of the time the high or the low of the day is done in the first 60 minutes, what if we just drop this down to 30 minutes and waited 30 minutes and then could start acting on the basis of where the price was inside a frog box? And so we ended up getting some rules to do that. And we said, if that worked, couldn't we just go to the opening, and we called that one the quick frog, and the I'm sorry, we called that the leap frog, and the quick frog, and the slow frog rules. After doing that for 3 or 5 years, it finally dawned on me. It was like, dude, you are able, now that you're used to trading that fast, you actually don't even have to wait for a full frog box. So we started saying, how much of the frog box could we shave down so that we could get towards the idea of the minimum manageable risk box? It wasn't until about a couple of years ago that I finally just realized, hey, dummy, you're already using the range stat. Why don't you just arbitrarily call this 1/10 the MMRB, and now you have 9 boxes to work with, or 3 frog boxes, and now you can treat that as a price ladder, and then inside the regular day, you always know whether you have enough room to the upside or to the downside based on range stat dimensions, and whether you can just take the trade without worrying that you're going to run out of room. So we have been refining, I call these frog, the mechanical frog generation 1 was slow frog, quick frog, and leap frog. We then started calling this the hybrid frog because we were starting to reduce the size of the box, and then just bracketing the open with that hybrid box and then taking the trade. And now we've refined it to the point where, to me, you can just put an MMRB on the opening and just follow it and just get in and just get on with it. So that's where I am now on, and the OR3 is kind of a formal way to just wait the 3 minutes of madness, and then if it stabilizes and starts moving out, well, now you have a nice trade, and you might be able to get a MMRB on it anyway that is smaller than the OR3. There were some other systems that we've known over the years, over the last 20 years ago, where the OR5 and the OR60 have been used by various traders at different times, and each one of those is identical. A guy simply says, wait 5 minutes, find the high and the low of the opening 5, and then play the breakouts from that, because that will often act as a noise barrier. And then the same thing with the OR60 is that is quite often like the slow frog, that if this thing breaks out of that it's not likely to retrace an entire frog box and then go make new lows of the day. But it turns out that in order to take advantage of the fact that 2 times out of 5, the opening itself is either very near the low of the day already and it's just going to go, or it was very near what was going to be the high of the day and then fails. And then in particular, if you have yesterday's close and today's open was a big gap and that thing hits and then starts failing right away, you could just say, look, there's a to yesterday's high of the day, and then there's the move to yesterday's close. Both of those can be reasonable price targets for the downside move, such that if you can put a little R10 on that thing and it rolls over, and you can play the fade. So that's the idea behind the relationship between the OR3, the OR5, and the OR60. And then the slow frog, quick frog, leap frog, hybrid frog. So now I want to get to Hamad's questions about the moving on from the Kata 2. So the way I like to teach that with Kata 2 is I say, don't try the bracket order around the opening because you're trading inside the noisiest part of the day anyway. And in order to understand the Kata 2 challenge, what I say is, look, just wait for that thing to have broken out to an unambiguous harsh winter, which I define as something like 1.5 frog boxes. Or if you were to go look down at the MACD histogram, you would see it's clearly in the winter and it's outside of the Red River. What that tells you is that you had an exceptional move right from the open, which means that this thing is in play. And then one of two things are going to happen when this thing calms down into the SSC pattern and you get this little risk box because of the breaking of the PSAR. This thing is either going to bounce and go, in which case the SSC is going to work, and then all of the Kata 2s are going to work, or it's going to start failing early, and then you're back into the collapsing dragon, which is where you want to be anyway. And you already know that you're now on the side of the big trend of the day so far, and that's why the collapsing dragon is my favorite, because you already have evidence that this thing is being dominated on the short side. You can calibrate the size of the move. You just saw them try to save it once and it failed, so that is like reinforcing that this is going to be a bad day. And now you have the best trade of all. It happens fast, furious, before lunch, and there you go. But when that doesn't happen, and you get that initial harsh sell-off, maybe all that did was go to the fail stat. And then early, it hits there, and now you have this orderly move, which is going to feature some kind of series of Kata 2s. Each and every one of those things, you now have new information about the size of the move, and you can determine, is it getting larger or smaller? Is this decaying or is this expanding? And now you can start learning to read price action during the day and frame those trades as you go. And so that turns out to be a very good kata or form or style of learning how to interpret price action, and then use that in conjunction with these MMRBs, and now you have a statistically based framework of price ladders to tell you when the Kata 2s still are justified. And then you can always go back to yesterday's high and low to determine when that move is coming into a natural resistance or a natural support, and you can then invoke the 2R battle drill. And then if it breaks above yesterday's high, you now know that this thing has real legs, because now we have new buying pressure coming in, much like the Kata 2 and the emerging dragon shows you. Oh, I've got new buying pressure taking it to price levels that it could not get to yesterday. So yesterday's high and low turns out to be a really important factor. So as I'm trading intraday, I really want to know where yesterday's high was and where yesterday's low was, so that if it does open inside this yellow zone, no matter where it opens, and now comes up to that known resistance, pauses and goes, now I have new evidence that it's in the same way that mechanical entry is identical in concept to the emerging dragon. It broke through a very pinpoint level of resistance that it could not get to yesterday, and that's the first piece of evidence that new money is coming in on the buy side. And that's why the mechanical entry is the mechanical entry for swing trading one day at a time. So one of the things I can know about what kind of day is it going to be today is how big was the gap, how big was yesterday's range, what happens when it gets to yesterday's support and resistance, does it break through with power, does it start reverting and stay inside the yellow zone? That starts telling me what kind of a day it might be. Then I can look and see, hey, what's the morning session look like? How big were the dimensions of that? And then when it narrows into the sideways channel of lunch, I can then say, well, today was the morning session was up and then it got sideways, and now it'll either half retrace back or it might half retrace continuation, or maybe that becomes asymptotic. So I can start looking at this expansion and contraction as a normal process of breathing, and now I can trade the afternoon session with the dimensions of the morning move and the lunch move in hand. And what I like to do when I'm trading around lunch is that range compression is usually a place where I can start seeing the Z3 lines coming together inside even a frog box, and now what I have is a Z3 pinch, which now supports a large surprising range expansion. And if that thing stays sideways for so long that now all of the 4 regression lines are inside that box as well, then I have a super pinch, and that's great. So I can avoid the sideways quiet channel until it becomes a Z3 pinch, and hopefully that thing becomes a super pinch, and now that gives me like an acorn, which gives me the massive moves in the afternoon, which I can calibrate. So that's a lot of standard patterns in there. So how would I approach answering Hamad's question? This is the way that I would do it. I would say on these katas, the first one that I would learn is the SSC, because I have to understand the rules to be able to identify the fact that there actually was a harsh winter that was created, and it is turned enough with a minimum manageable risk box to support the SSC. And then the supported fall crossing or supported spring crossing become these Kata 2s. I think of that as a Kata 2. If I wait a little bit longer for a little more confirmation, I get a later entry on the owl or the emerging dragon entry. So these are kind of all of the ways that I get continuation patterns after the SSC. But then if the SSC fails, I might be able to get a Kata 2 to the downside to front run the collapsing dragon by entering short in the pocket, or I might just go ahead and wait for the CD. So I would start by recognizing the SSC pattern and being prepared for it and planning for this routine work and understanding the psychology of those moves. And then only after I had learned how to spot finding the movers, the ones that have the harsh winter that's in play, I can now start playing SSC and Kata 2 entries or collapsing dragons all day. Then the next set have to do with what do I do when those runs are done? When those early easy moves up and down fade, and now I'm starting to get this sideways quiet stuff. Well, that's where I want to start understanding the sideways quiet channel and why I don't take that pattern until it becomes a Z3 pinch, meaning that the Z3 lines have converged sufficiently because price was so sideways. They converged sufficiently so that I am inside of one frog box with all of the Bollinger Band pinches. Now I can play the breakout of the Z3s, because by definition I have an abnormal pinch, and now I can play that as a critical state in either direction using that as my risk box or the MMRB. And then if that stays in that sideways so long, that Z3P might actually become a super pinch. The super pinch happens when the Z3 lines are within the frog box and the 4 regression lines consisting of the RL30 and the RL10 and the RL30 and the RL90 and the RL270, all 4 of those guys are also located inside the Z3 lines. That is truly an acorn that is waiting to happen and to explode, because not only do I have now abnormal volatility, but I have all four regression lines, all those four different traders all think that is the fair value. So now when it does break out, I can say from the low of the day and the high of the day, what are the upper limits of the range stat move? So I can tell you how far today it could go and still get to the range stat, and I can decide what that R multiple is and probably trade it in both directions. So the way I would learn these patterns and to know when it's time to move on from the Kata 2 challenge, which is simply, it's a test of your discipline and focus to see, can I follow somebody else's rules with 100% precision? Can I notice the things that my monkey mind tells me, and then instead of acting on it, simply record that in my journal so that I have something to research later? And then can I go back to the way I've marked this up and coach and assess myself? And can I master these patterns? Let's call that one the Kata 2 and the owl and the collapsing dragon. And then the Z3 pinch and the super pinch. So I can start, that's the order that I would learn them in. SSC, collapsing dragon, probably the Kata 2, and then the Z3 pinches and all that. Once I've mastered those on the intraday trade by trading either the aggressive and volatile EWZ or the conservative and chillin' DIA, now I can try it with a fast mover and try it with a slow mover. And I can actually try to trade both because these are semi-uncorrelated. Now I get a chance to practice my span of control of 2 and have a conservative mover and an aggressive mover, but they move at different times of the day. So one could be moving while the other one is consolidating. So learning to trade those two symbols, they're very large, liquid. They trade enough during the day that you can practice the patterns. And then I can do that to come back and check on my ability to follow rules, journal correctly, provide coaching, post my charts into the chat room, and then mark up my chart with coaching notes that says, this is what I did, comma, this is what I now see as I try to coach myself. Now I think this is what Ken is going to say, and then I listen to what Ken says, and then I can compare what Ken says against what I thought he would say, and then I am now learning to develop the coach's eye so that I can actually use that eye to act as a wedge between my impulse to act with my monkey mind. I can just follow the rules because I have this wedge set up by the coach's eye, which says, understand you got that impulse, that just gets written up in my journal. But meanwhile, I'm following the rules, and then I'm going to collect all the evidence, and then I'm going to analyze the rules, and then I'm going to make decisions based on evidence and analysis. But I thank you for the impulse to help me notice the other things that are going on. So when do you know it's time to start moving up in those things and add some other symbols? Well, I say start with the symbols EWZ and DIA until you can master the techniques. And then what you want to do is have maybe the 3 sources of guys on your list, like Frog Champions, continuation patterns from yesterday's good trades, and then new swing signals. Those are the 3 categories of things that I trade that get onto my list. And my list are the things that I prepare. And then my job is to wait to see which ones are moving up strongly during the day and which ones are moving downward poorly during the day, and then try to find the extreme movers and try to stay out of the run-of-the-mill stuff in the middle, because the biggest moves come from the ones that have the biggest gaps and the biggest initial moves. They draw you and the market to themselves early, and that's where the heat is. And now you have the edge of all this disciplined Kata 2 technique to be able to manage your emotions during these critical times when everybody else is panicking. You're there because you want to be there, and you have a rehearsed plan, fully prepared to be calm while everybody else is running amok. And that's how you distinguish yourself from the herd. You still feel all of the emotions of the herd, but you're one of the few members of the herd who can maintain a calm emotional state in spite of all the emotions, because you have that wedge between the impulsive monkey mind and the things that you act on. So while the herd is losing their mind and creating the conditions for collapsing dragons and SSCs, you are at your calmest state because you know exactly from your price ladder how far this thing has historically and statistically moved, and if you still have an advantage. So you know that you're ready to start adding new symbols and finding the movers intraday when you have mastered those two patterns, and now you start feeling like your span of control is under control, and you can start looking at some of the other symbols we trade, picking up adding the usual suspects like Devon Energy and Cliff and Nvidia, for crying out loud, all the things that are like on my swing charts or whatever, and then any continuation patterns from yesterday, because that thing is still in play until proven otherwise. And then any new swing signals, because it now just came into a critical state where for the next 3 to 5 days it could be great. So that's sort of the pathway to go from the systematic, disciplined trader of Kata 2 with EWZ and DIA into mastering some of the other patterns with those same symbols and mastering the journaling, and then adding to the list of symbols judiciously. I would go from like 2 to 5. And then when that becomes manageable, up to 10. And you may find out that if you get the right 10 on there, that's all you're ever going to need. I probably have 20 on there. Now, Greg asks, what's the back fist in this context? I think of all these patterns, the one that is, I think, the most reliable and represents the least challenging to the beliefs of most new traders is the supported fall crossing, aka the Kata 2. And the reason is you already have you're not trying to chase the harsh winter right from the opening. You're not trying to get caught up in all that. And you noticed that it turned around and gave you an SSC, and that SSC gave you that first leg back. And then it rolled over enough to turn it into the fall, but then it found a support level at a higher low. That is the very definition of the Kata 2, right? Because if I go to here and draw that line across from the peak of the RL10, I'm up into the emerging dragon. So what I'm trying to do is, I say understand the Kata 2, which is entering as soon as it gets across the dragon and it's in the pocket. Now what you've got is you're learning how to have a very precise reward to risk entry, but inside the frame where you've seen leg one down, you've seen one successful leg up, but you probably still have 2 potential leg up to get back to whatever the previous fair value was just prior to the harsh winter. And we know that the harsh winter, it's usually jump out the window and then climb up the steps. You've seen 1, you plan for 2, and you hope for 3. That gives you a very precise trade frame that allows you to pinpoint your entries and exits and your reward to risk, and everything is based off of the most recent price action, and that's an engineering problem. Now you're not having to interpret, well, where could, no, I know where all of this stuff is. If this happened to be the low of the day, that might be a frog box or two, and I still know where my upper limit for the range stat is. So if these things work, it could go all the way back to here and not be crazy. So to me, the back fist idea on this one, the one that I like guys to practice on, is the Kata 2, because you've seen a move down, you've seen a successful move up, you've framed the trade. It's already, the panic is probably over, because even though they got the big win early, the other guys got a mini win, and now it's a little more kind of game on, and it's becoming normal. And it's usually far enough into the day that you're away from the shenanigans of the open, but you still have 5 hours left in the day for this trade to unfold. And this, to me, is sort of the sweet spot to learn if you have the cognitive mindset and the emotional mindset to manage intraday emotions and trading in a systematic way. And then plus, when this works, the Kata 2, you can see 3 or 4 or 5 of those on the way up, whereas you're only going to see one SSC, the first leg, or one more collapsing dragon. So the Kata 2 as a technique allows you to spot many times during the day when those conditions are still ripe, and you still have enough room during the day to do it. And then when you translate the day trade to the swing trade, you're going to see Kata 2s all the time. And you're attracted to the ones that have strong trend and then have a measured pullback to some measured support level, and now that thing has just started moving again, and now all of the technique that you used over here to frame that trade, you realize that's all fractal, and that here's my stop on my collapsing dragon, so I actually have a pretty small risk box, and if this thing works and it gets back to the previous 10-day high or whatever, and I've got 2 units of reward, there's my 2 to 1 on a swing trade, and I'm done in one. So to me, the SFC is really the first pattern that I like to teach, even though the collapsing dragon is my personal favorite pattern to trade, followed by the SFC because I like to just get on with it. But actually, the CD is my first, biggest, bestest favorite. The super pinch is like 1A. And the Z3 pinch, but that's sort of an advanced technique that after these things have run their course, now you're talking about intraday around the lunch hour, and those things have compressed, and nobody can trade at lunchtime. Oh, sure I can. I love that one. But that one takes a little more guts to do it. So even though it's my favorite, I like teaching the Kata 2 first, just because it is the highest frequency trade and the easiest one to calibrate and get the measured moves. And when you can start, and it sort of aligns with the idea of buying strength on dips until it no longer works, you know. So it's the least challenging in terms of beliefs. Check or hold? Make sense? Okay.
Yep.
Let me go back to Hamad's question. See if there was everything on there. Yeah, so the idea, just as a quick recap, that OR3, about 15 minutes in, usually the morning news is done. 30 minutes and 60 minutes is where the hybrid frogs. By 60 minutes, I can expect to have seen the high or the low of the day. But I also know that 2/5, 40% of the time, I was going to see an extreme move already happening. I feel like when you're ready for that, you can start with that hybrid frog. It opens here, and then you just take it in whichever direction it goes and just get your risk out. and then you're postured for those big moves of the day. That will minimize your regret when you realize that that is simply a way to be exposed to the move in a measured way. Not trying to get them all, but just picking one, and if it works, it works. So that's what I would say on that. And then my other description about when you know it's time to start adding the other symbols. So that's what I want to say about all that. Was going back and I was pulling up some Kata 2 flashcards from the olden days. This one was from about 3 years ago. Still pretty good. You know, the harsh winter, the first turning, the successful high or low, the crossing of the dragon. Then you still have a long way to go to the back to fair value. That's the Kata 2. This was one of the earliest ones that we did back in 2020, October. Had a little bit more in there. This is what happened when Griff Cooper started a disciplined approach to using just the Kata 2 on EWZ and DIA. That he was, this is where panic and discipline was starting to affect him. And then once he just said, I am going to just follow the dang rules, it turned him around in a significant way. That's statistically significant. This whole progression takes the form, if I was going to call this Japanese manufacturing, is that Kata 2 is we are having a standard set of rules, and we're just going to follow those rules and make sure that we're not breaking the rules, and if we break the rules, we're going to fix that. So we're just going to try to conform. Kaizen is when I am now ready to start going beyond the rule set and adding some careful, judicious micro improvements. Like I start with the SSC and then I add the OWL and the Kata. So now I'm starting to add chains to the trading, but using very carefully evidence-based micro improvements. And then I can slowly begin to scale, adding more positions, doing more reentries, increasing the size of the trade, dollars per trade. And then when I get out into Kaikaku is when I'm redesigning new systems and building on those other frameworks and adding entirely new rule sets on the basis of successful performance of micro improvements. Now I'm doing transformational improvements. And so this is sort of the skill progression in industrial manufacturing, if I can say it that way. And then if you look in, we have some flashcards on elements of Kaizen and Kaikaku, which is how you go about managing yourself in a business-like manner on the basis of statistics and systems thinking and all the things that make Japanese manufacturing great. When we're thinking about our proficiencies, we could take this kind of position and simply say, look, all those concepts that you were mentioning, I don't even know what those are. Or now you said the word, but I'm still working on trying to personalize the understanding. When I have personalized it and I can turn it into my own words and explain it, I'm at that level. I'm now familiar with it in my own words. Then when I can perform it to standard, that's the important one. Now it's locked in and it's part of my standard trading process. That next level up is now I could actually teach somebody else to do it. And then at some level where you have internalized it so much that it has become part of your identity. You know, so as we start looking at some of these other patterns and the languages that we're using, like Kaikaku and Kaizen and different patterns, can kind of come back to this. That's what we're doing with the job book that we're writing now, is to sort of list out all those things as a way to have a working list of all the required knowledges that we wanted. Way back in the day when we first started doing this, when COVID was starting, back around 2019, we were actually looking at what were the patterns that we thought people needed, what were some of the psychological conditions to practice on, what were the terms of art or the techniques? What were some of the specific framing patterns? What were the different personas that we wanted to adopt so that we had the right mindset with a spirit animal? What were the processes like plan, prepare, execute, assess, sustain, improve, and action, knowing your histogram, how to do the 4-column learning journal? All of those things became forms of kata or standard knowledge, and we have been slowly and steadily moving towards that, getting it documented in foundations, getting it written into this book that we are getting close to publishing, and then the job book, which then breaks out 75 pieces of knowledge that we think are essential. We've already got the glossary and all those darn flashcards that are individual components, but the job book and the glossary and book number 1 are always that we're trying to turn this into an industrial, shop manual, if you will. Okay. All right. That's everything I got for you tonight. I want to get this published and then to get the reports finished. I'm being called upstairs to do some work in the kitchen remodeling. They're getting ready to install the countertops for tomorrow. So, anyway, that's what we got for today. Take good care, and I'll get this hung later tonight as soon as the recording is up. So, thanks for hanging in there, and we shall.
No, thank you.
We shall see you soon.
Excellent.